Happy Saturday, dividend growth investors. This is Colby, the DGI Crab, coming to you with another good news Saturday video about the Illinois Toolworks dividend increase. I'm not a professional investment advisor, so when I talk about my tiers and opinions on these stocks, just take it as that. It's just my opinion. You should always do your own due diligence before you invest in anything, but ITW is one of the stocks in the tier 2 category I've put together. This channel is all about age-based or time horizon investing. So of the 60 stocks that this channel covers, ITW is indeed one of them, or I wouldn't be talking about it here. And it has a dividend increase streak history and dividend yield that made me put it in the tier 2 category. I think it's best for investors age 31 to 41, which is the category that I fall into, at least for the next little bit anyway. I'm coming up on the end of that sooner than I'd probably like to. So anyway, what did they do? So they have increased their dividend by about 7%. It's going up 10 cents per share per quarter or 40 cents annually. So instead of paying $5.60 per year per share, it's now moved up to $6. This is an increase of basically 7%, like 7.1 if you do the math, but we're just going to call that a 7% increase. And it's pretty well in line with what they've been doing for the last few years. If we come and look at their history on Seeking Alpha on their payout growth, just going back to 2010, you can see here that a lot of the times they're doing increases in the higher single digit range. This 4.8% they did in 2010 is one of the is the worst one that I have here on the screen here. But sometimes they even go up a little bit higher than that. You could see here through a lot of the 2010s, they were doing 14, 15, heck, in 2018, they did a 24% increase, jumping all the way up from 286 to 356. But for the last few years, they've been pretty consistent to high 6, low 7%, 6.76, 6.79, 7.2, 7.1. They're doing 7.1 here again. Very stable, very steady. They are a dividend king with 50 plus years of consecutive dividend increases, or 50 consecutive years of dividend increases. Very, very safe company as far as that goes. They have a ton of different patents and pending patents and a pretty wide moat as a result of all of that. And they have been able to be a steady Eddie player through good times and through bad. And again, that is why they are one of the stocks that made the final cut that this channel focuses on. If I pull up my spreadsheet here and we look at the group of tier 2 stocks, there are 19 stocks in this particular group. ITW, with that dividend increase, has sort of moved them up towards the upper half of value by jumping this up from 560 to $6. That definitely helped, because now it means that they're yielding a bit higher. And right now they're yielding 14.5% higher than their 4-year average yield, which does make them attractive at this point in time, but maybe not necessarily a slam dunk of a value. I still want to get these single stocks. If I'm putting my money into them, I need them to at least be 20% undervalued in this yellow category, or 30% or better, even more ideally here in the green category. But ITW definitely did just about what we were expecting them to do. I was hoping and expecting a 7% increase again. That's what they came up with. No complaints from me whatsoever. So congratulations to you. If you are an ITW shareholder, you just picked up an extra 40 cents of forward annual income for every share of ITW that you own, and you didn't have to even lift a finger for it. Just a raise for owning stock. Not too bad. Not too bad. All right, everyone. Well, this is a shorter Saturday video. I like to bring the good dividend news to you on Saturdays when it becomes available. Let me know if you hold any ITW in your portfolio, if you're happy with this increase, and I will see you on the next one.